first stock is actually a banking stock, CIMB. I think yesterday we featured Affin. Today we are going to talk about CIMB. I think if you look at the share price, yes, if you look at the medium term, it was actually on the uptrend. Last few days, however, it was very volatile. I think that if you look at the share price performance, it fluctuated wildly. At one point in time, we actually breached the key support channel as well as the 30-day SMA. But I think subsequently it actually rebounded quite swiftly. The candles actually bounces back above the 30-day as well as the previous support trend line or support term resistance trend line in just a matter of days. Okay. In other words, I think if you look at the longer term trend, it is still on the upward trajectory. And the fact that I think the candles are now trading above the key SMAs, yes, I think that the performance of the last few days may be hiccups, but I think it did not actually tarnish the longer term uptrend. Hence, I think we believe there is still room to the upside. Do expect volatility to increase. The second stock is actually a construction play. I think if you look at Gamuda, just like the construction sector, the construction index took a beating the last few days. And I think if you look at Gamuda, there was a breakaway gap a few days ago, and share price have actually bottomed out somewhere near the 38.2% Fibonacci retracement level. And since then, share price or the candles have actually bounces back above the 50-day SMA. And if you look at yesterday, it is just short of one tick to close above the 30-day SMA and to fill the breakaway gap. Actually, when I look at the reading, it was only about 1 cent difference. Okay, and then the breakaway gap will be filled over here. Okay, so I think looking from the chart here, we think there is still room to the upside, but I think we need another white candle to validate it, because another white candle, basically, like I mentioned just now, will fill the breakaway gap. Okay, and I think and if you look at the downside, the 50-day SMA seems like a good support. The third stock, Powerwell. Okay, I think share price actually took a dive after hitting a high of 58 cents in July. Okay, the correction was sharp. Okay, it hit almost 50% of the Fibonacci retracement level, but I think that has become the base for the stock. Okay, and right now, after rebounding the last 2 days, we will expect the candles or the stock to try to fill the breakaway gap around this corner. Okay, I think if you look at the breakaway gaps, basically not very far from where it was yesterday. And once that is actually filled, then the 30-day and 50-day SMAs will be the next target to challenge. Okay, for now, I think trading will remain volatile because the candles are trading below the 30-day and 50 days. But once those levels are taken out, I think 58 cents will be the target to beat in the longer term. Okay, for now, I think a base form, potentially on recovery play, but once it hit closer to the moving average, beware of potential profit taking. We need to see a stronger base before it actually confirm the longer term uptrend.